All right. Today is Sunday, October 10th. This is a recap of the stock market activities last week and an outlook for the week to come. Folks, this show will be dynamite, and therefore buckle up your seatbelts. And here we go. In focus tonight, we're going to review the disastrous jobs report that we got on Friday and the hidden clues and the hidden disasters within the report, and there are many of them. We start with the number. Here is the number that we got: 194,000 jobs created in September. Meanwhile, the expectations were for 500,000 jobs to be created. The number is extremely disappointing, and of course, the unemployment rate actually went down from 5.1 to 4.8. which seems to be good on paper, but it is actually disastrous. So hold that thought, we will revisit it in a minute. But if you've been watching the show for a while, you know that I call the Bureau of Labor Statistics the kitchen, and I accuse them of cooking the numbers because they have done so in the past to please whatever ruling administration it is and to please Wall Street. Now, why would the cooks give us a bad number, not a good number? What is the reason and the wisdom behind that? To answer the question, we have to go back to 2008-2009, the financial crisis, when the Federal Reserve ushered the tsunami of liquidity and accommodation to Wall Street under emergency measures, the quantitative easing program, aka the cocaine operation. And the goal from the cocaine operation is to grease up Wall Street and the stock market to make the rich richer. And of course, they're not going to let any disaster or bad news go to waste. When the pandemic hit, they doubled down with more accommodation measures for Wall Street. Mind you, the original emergency accommodation measures enacted in 2009 to help Wall Street recover from the financial crisis, those accommodation measures were never removed. When the pandemic hit, they doubled down by ushering the tsunami of liquidity. Trillions and trillions and trillions of dollars all went to benefit Wall Street and the rich. And they continue to buy a minimum of $120 billion in bonds and mortgage-backed securities to grease up the stock market higher. But here's the problem. Inflation has been rising at a whack recently, and the Fed has been pushed in a corner. You gotta start removing the so-called accommodative measures for Wall Street because they're pushing inflation higher and higher and higher. Yet the Federal Reserve, led by Chairman Jerome Powell, the criminal that he is, resisted, and they said, you know what, we got two mandates: price stability related to inflation, and the other mandate is full employment. We're not going to remove the accommodative measures for Wall Street until we achieve price stability and full employment. And the chairman himself admitted that they have achieved substantial further progress when it comes to inflation, meaning the current level of inflation is out of whack and it merits removing the cocaine operation by tapering assets purchasing and perhaps increasing interest rates higher. But the other mandate, the full employment, has not been met yet. And therefore, we're going to use this as an excuse to continue to grease up Wall Street with a minimum of $120 billion of taxpayer money every single month in hope that someday we will achieve full employment in the economy. And in this program, I told you that this policy is disastrous. It will only succeed in creating hyperinflation. It will only succeed in creating hyper bubbles in assets prices, be it equities or real estate. It will succeed in creating the widest wealth gap in history between the poor, the middle class, and the rich. But it will not succeed in recovering jobs in the economy because there is no correlation whatsoever between printing money out of thin air to grease up Wall Street and between the creation of jobs. The creation of jobs is a bottom-up approach, not a top-bottom approach. You don't grease Wall Street with trillions and trillions of dollars hoping that some of that money will trickle down and create jobs, because we now know that Wall Street is using the trillions and trillions and trillions of dollars printed out of thin air, racked up on public debt for the next generation to deal with. They're using that money for what? Shares buybacks and executive bonuses. They're not creating jobs. And therefore, heading into this number, the threat was, if we get a good number, a hot number, then the Fed will get closer into tapering and removing the accommodative measures for Wall Street because they have achieved substantial further progress in inflation and substantial further progress when it comes to full employment. And therefore, the goal heading into the number was to cook a cold meal. And indeed, they served us a cold meal, way below expectations, in hope that this number will please Wall Street and will allow the Federal Reserve to continue its accommodative measures to grease up the stock market higher, to benefit, of course, the ultra-wealthy. And of course, I trust the CCP numbers, the Chinese Communist Party's numbers, over the United States Bureau of Labor Statistics numbers, due to the cooking. For example, the ADP jobs report that we got earlier in the week, this is for the private sector of the economy. According to the ADP report, private payrolls rose by 568,000, meaning the private sector of the economy created 568,000 jobs in September. But magically, the private and public sectors combined only created 194,000 jobs in September, according to the cooks over at the Bureau of Labor Statistics. Perhaps they put too many onions this time around, and they made it too obvious.
Don't put too many onions in the sauce.
I didn't put too much onions.
Take a look, for example, the contrast between the ADP report and the BLS report. On your left-hand side is the private sector of the economy. On your right-hand side is the private and public sectors combined. The private sector, according to the ADP report, created 49,000 manufacturing jobs, but magically, according to the BLS, the entire economy created only 26,000 jobs in manufacturing. The ADP report says we have created 46,000 jobs in construction. The cooks at the BLS say we only created 22,000 jobs. The ADP report says the leisure and hospitality sector of the economy created 226,000 jobs. The cooks say leisure and hospitality only created 74,000 jobs, and so on and so on. Somebody's wrong here. Somebody's cooking the data. Is it the private company, the ADP, or is it the public organization, the government, the Bureau of Labor Statistics? We know out of these two, one has a history of cooking the numbers. And this is the BLS, the Bureau of Labor Statistics. And of course, they're blaming the contrast due to seasonalities and how they can't count temporary versus permanent job losses, etc., etc., etc. But it gets even more comical because the last number we got in August from the cooks over at the Bureau was 235,000 jobs versus expectations of 720,000 jobs. And of course, Wall Street celebrated this number, and the Fed, led by Jerome Powell, also celebrated and said, you know what? You see, we need to continue the accommodative measures for Wall Street because the economy is not creating jobs as much as we thought, and perhaps a little more printing will motivate employers and employees to create and seek jobs. And we know that this is baloney, of course. It's all garbage. And now that nobody's paying attention to the number in August, they revised the number higher by 131,000 jobs. So the cooks missed the number by almost half. Does anybody believe this garbage? But hypothetically speaking, let's take the number and assume it is truthful, because it's even worse for Wall Street and the Fed. It's not good because the cooks, yes, they cooked the number down, but they left the important details, such as wage inflation exploding higher. And oh, by the way, the unemployment rate went down, which we will discuss in a minute. But if the unemployment rate goes down, isn't this substantial further progress, Mr. Powell? Of course, this is not the kind of substantial further progress he was hoping for, but regardless, it is what it is. Let's say that the economy created 194,000 jobs, the unemployment rate of 4.8%, and here is the unemployment rate among different groups: 4.2% among Asians, almost 8% among blacks, 6.3% in Hispanics, and 4.2% in whites. Why did the unemployment rate go down? Which is, by the way, the biggest blow to Fed Chairman Jerome Powell. This is the worst case scenario for him. The unemployment rate went down because employees are not seeking jobs anymore. The participation rate went down. Employees are giving up on this economy, and they are resigning and leaving their current jobs in droves. The U.S. jobless rate fell to 4.8% in September from 5.2% a month earlier, the Labor Department reported. The rate fell largely because many workers exited the labor force. Why did they exit the labor force? Many reasons, but of course the media doesn't want to talk about some of those reasons because it challenges the narrative and the propaganda they've been pushing for a while. I read and heard everything from seasonality factors to perhaps fear of the virus to perhaps temporary workers and many bogus explanations. But let's hear this guy from Bloomberg because he slipped and he said the truth.
They go on to say it's a seasonal adjustment problem because of last year when nobody was at work in the schools. There were actually 1 million people who were hired during the month or who came back to work onto school payrolls, and it shows up as a seasonal decline. Automobiles and parts, we've seen people because they can't get the proper the chips for cars. We've seen factories close down, so they lost some jobs. Airlines coming back, though, as tourism has picked up and airlines are trying to restaff. Healthcare lost 17,500 jobs. That's unusual given the situation, except that maybe vaccine and mask mandates.
Bingo, bingo. Who would have thought if you threaten your employees by giving them two choices? Number one, to submit and obey the orders regardless of their scientific backing and you get the jab, or you go homeless. Who would have thought that some employees are going to refuse to be bullied into doing something they don't want to do and they're going to quit their jobs? Who would have thought that could happen? Wow. Let's destroy the economy just to serve our ego and control, our hunger to control the population and push them into submission to our will. Here is Steve Forbes explaining these draconian mandates and the negative impacts they're having on the economy.
Steve Forbes, chairman and editor-in-chief of Forbes Media and former presidential candidate, is in focus now. Steve, this feels like we are running around in circles. What is the president trying to do?
The president's trying to have it all ways. His whole thing on vaccines is very confusing. People don't like the coercion part of it, and it is leading to people getting fired. Here we have health workers being laid off at a time when there's a shortage of them. Airlines, same thing. And so the Delta variant, that hurt in September, and this vaccine mandate's also going to hurt. What comes out of this jobs report is what's amazing is how the economy is just raring to go if these artificial barriers are removed. If you look at the household survey, which better hits small businesses, hitting what small businesses are doing, the job creation was actually 526,000. The big decline in jobs came not in the private sector, which was up over 300,000 in September, revised another up 100,000 for July and August. The big fall off was in government workers. That is especially in the schools with these crazy mandates, people confused about what they can and cannot do. So these are government-inflicted report, not something about the natural health of the economy, which would heal quickly if certain things were not stupidly done. Be blunt about it.
That is so fascinating. So what you're saying is that President Biden effectively is getting his own workforce fired. I mean, those are the people that he can control in the government, right?
Yes.
That's mind-boggling. Huge companies like IBM and American Airlines are now already warning their employees that if they are not vaccinated by November 24th, that's their deadline, they will be fired. IBM,
and they don't
just
even take into account people who've had the disease, where the immunity is better than the vaccines. This kind of one-size-fits-all blunderbuss from the top, very destructive, ultimately.
The media was gloating over draconianism, totalitarianism, and tyranny. The media says all of that tough talk over quitting jobs over COVID jabs mandate is really just idle threats. The media says lots of people say they'll quit over jab mandates, but research shows few do. The media says facing with losing their jobs, even the most hesitant are getting jabbed. Wow, if we try tyranny and we threaten employees with either submitting to the jab or becoming homeless, losing their income, not being able to feed their families, who would have thought that the majority will have to submit? They might submit now, but they will not forget. Next time they get to the poll, they will not forget who violated their bodies without consent and for no good reason, even though a lot of these employees are already infected and they have robust protection from prior infection. Even the champ got bullied into submission. They violated his body. And of course, who would have thought that certain employees are not going to submit? And they're going to say, you know what? We're fed up here. We're done. Too much. We've been overworked, underpaid, used and abused. And on top of that, we have to deal with all of these draconian mandates. No thanks. Goodbye. Hundreds walk away from jobs at Detroit hospital system over jab mandates. And here are the geniuses over at New York. New York hospitals fire, suspend staff who refuse jab mandates. And of course, all of this is firing back on the economy. New York jab mandate is working, but hospitals are struggling with the fallout. Let's have people die because there is a shortage of staff at the hospitals. Why? Because we want to serve our ego and control. That's all. It's not about science. It's not about protecting lives anymore. It's about ego and control. A bunch of lunatics took over, and they managed to brainwash about 50% of the population into becoming big pharma goons. New York governor declares emergency amid staffing shortage crisis prompted by jab resistors. The government thought everybody will submit to their will, to their ego and control, but they're now surprised by the amount of workers who said no thanks, goodbye. Jab mandates hit amid historic healthcare staff shortage. And here's in Oregon. Oregon Nurses Association calls nurse staffing shortage historic and catastrophic. One ONA official said 60% of OHSU's nurses are considering leaving the profession or perhaps going to OnlyFans. Anyhow, he said that percentage is reflected at the national and state levels too. Healthcare workers are quitting in droves. Jab mandate latest hurdle in Oregon nursing shortage. And even in my city, my beloved city of San Diego, we're having a problem too. San Diego hospitals face staffing shortages, travel nurses in high demand. And of course, nurses had enough. They're done here. They had a tough year last year, and it continues to go on and on and on. They're overworked, underpaid, not respected at all, and they've had it. Nurses say, I see someone quit every day. Every day somebody's quitting. They're done here. We're about to have one of the biggest labor shortage crises that we've ever faced. And of course, there are many reasons here, but these jab mandates are not helping at all. And even teachers are quitting in droves. Teachers march through New York City to protest jab mandates. But of course, the media, they're no longer journalists here, reporting the facts and the truth. Their job is to engineer the public opinion. For example, the New York Times had an article, and the article says, New York City teachers protest COVID jab mandates. Now, when you try to click on the article, it's already been removed. It's done. You cannot access it anymore. Why? Because they've been beating on the drum on the narrative, pitting people against each other. The jabbed versus the unjabbed. If you're jabbed, you did your duty, you're protecting yourself and your community. If you did not, you are a Trump-supporting, MAGA-type science denier, and you're putting everybody at risk. This is the narrative. But now we're finding out that the people who are not getting the jab are actually nurses and teachers who teach science. We're also finding out that there are cops and firefighters. And of course, this doesn't fit the narrative that the media have been pushing for a while. The garbage narrative. It challenges the entire narrative. Why aren't healthcare workers and teachers getting the jab? And perhaps the unjabbed have other reasons for not getting it, besides being Trump-supporting anti-science maggots. And this is the next disaster, by the way. The waves of cops and firefighters who are about to quit their jobs over the mandate. Will a city mandate cause thousands of unjabbed LA cops to walk off the job? We're about to find out. And the deadline is October 20th. Folks, this is a massive disaster we're about to hit right now, and it will push the economy further into stagflation. Of course, the Commerce, the Labor Department, they deny all of that. They say, oh, we lost jobs because of seasonality and other stuff. But here are the facts. And this is a commentary explaining why we lost so many teachers, so many government teachers in September. And this is from the New York Post. But with schools back and the surge in C cases subsiding, economists expect to see the recovery in the jobs market march forward this fall, barring another flare-up in C cases. Another factor holding back the economic recovery, could be the patchwork corporate strategy on V mandates, says Peter Earle, or Early. Excuse us for butchering your name. But he is an economist at the American Institute for Economic Research. President Biden has called on major employers to mandate jabs among workers. Some major companies have, while others have incentivized getting the shots, but stopped short of mandating it. The headline number miss has everything to do with confusing patchwork of policies and messages on compulsory V word. Of course, the word we're not allowed to use because it might make our big tech oligarchs a little nervous that we're challenging the narrative and the brainwashing, which made the majority of population cheerleaders and goons for Big Pharma. Of course, keep in mind that we have over 11 million jobs openings right now. 11 million, more than the entire unemployed population, but they're not being filled. So once again, what is the wisdom of the Fed printing another $120 billion to grease up Wall Street and the stock market? We have more jobs than the entire unemployed population. We have already achieved maximum employment, Mr. Powell. And if you continue in this reckless policy, you will only push the economy into hyperinflation and perhaps stagflation. And sooner or later, you're going to crash the economy and the market too. This is the biggest policy error from the Fed since the 1960s. But let's hear the delusion from the Commerce Secretary.
So whenever I do this on a monthly basis, and I always say the same thing, which is we can't over-index on any one month. And so I'm going to start with that. Recovery isn't a straight line. We are recovering. We are seeing recovery. There is still growth. And you're going to see ups and downs month to month. So what I think is the Delta variant is still making it a challenge. Not enough people, we still have to get people vaccinated. I give a lot of credit to companies that are mandating vaccines. You see in those instances, like United Airlines, they're looking for 2,000 flight attendants and they have 20,000 applicants because people want to work in places that are safe.
Lady, you're asking private businesses to follow the same approach that you guys followed and you lost 100,000 jobs. More than 100,000 jobs. This delusional maniac says if private businesses follow our footsteps, we're going to create more jobs and the economy will thrive. Just look at us. We did the same thing and we lost over 100,000 jobs. The government. What a brilliant approach.
And my big takeaway is that we have to make the investments President Biden wants to make in childcare, in elder care. You want women to go back to work, they have to be able to send their kids to a high-quality, affordable place for childcare. So, I don't over-index on any one month, but I do know that folks need to get vaccinated, and we have to make investments in childcare and home care.
Madam Secretary Jim Cramer, great to speak to you again. Thank you for coming on Squawk on the Street. I'm concerned. Europe. Okay, they were way behind us. Now they've passed us. Portugal is the #1 country in the world. It's the Green Pass. The Green Pass that makes it so that when you go anywhere, you can't even get an ice cream cone without a Green Pass in Europe. When will we have Green Passes in this country?
And listen to Wall Street propagandist Jim Cramer asking, when can we have tyranny? When can we have economic apartheid? Wait for it, Jim Cramer. You're gonna get your wish. We're gonna have green passports sooner or later. Remember when President Brandon last year said we're not gonna have jab mandates? And now, of course, he's doing jab mandates in a draconian fashion, ignoring the science, not including natural immunity within the mandates. So you wait. The green passports are coming. And you know what else is coming? Another wave, regardless of all of this garbage. And he was President Brandon, and he's also confusing himself now. He's stumbling all over the place. Listen to what he said on Friday after the abysmal jobs report.
The unvaccinated also put our economy at risk because people are reluctant to go out. Think about this. Even in places where there is no restriction on going to restaurants and gyms and movie theaters, people are not going. And anywhere near the numbers because they're worried they're going to get sick.
Really? The jabbed are afraid to go out and about because they're afraid from the unjabbed? Senor, you told us if we get the jab, we're free, we're done. We have 360 coverage, remember? We're not going to get the thing, we're not going to transmit the thing, and most importantly, we're not going to get sick from the thing. Well, guess what? Only one thing worked from all of these, which is preventing severe hospitalization. But the jab did not prevent the transmission or the infection to begin with, and therefore, people are hesitant to go out and resume economic activities, not because they're afraid of the unjabbed, because they're afraid of the garbage propaganda and the confusion. Listen to the New York Times. I think this is a MAGA newspaper. I'm not sure. But they say the CDC needs to stop confusing the public. You people have been flip-flopping all over the place. And the confusion is the reason behind the slowdown in economic activity and the hesitancy of people going out to take new jobs. Of course, the media has censorship. It's over. You're not going to get any free media, any real news. So you're not going to hear about the facts. But we know from anecdotal evidence, from our own experiences, from our family members, our friends, we know that we got the jab and we got sick anyways. We transmitted the thing to other people. And therefore, people stopped and said, you know what? Perhaps it's too early here. Perhaps there are more things that we don't know about this thing, right? And soon enough, we got the news and the facts that the jabs wane in efficacy over time. And this was expected, of course. And this is what keeping people from resuming economic activities like they used to before. Remember this, earlier in the summer, the economy was thriving. People went out and about. We were creating jobs by the tune of 1 million jobs a month. And then the third wave came, the D wave, and we realized that we're not out of the woods yet. And the problem isn't from the unjabbed. The problem is from how this thing works, which will probably stay with us forever. This is according to the surveys among the jabbed and the unjabbed. They say that this thing will stay with us forever. And of course, the confusing information from the government, the flip-flopping, did not help either. And by the way, Jim Cramer says, where's the green passports? Where's apartheid? Who's he talking about, by the way, when they continue to demonize the unjabbed over and over and over and over every single day? Who is the unjabbed? Here it is. Only 28% of young blacks, New Yorkers, are jabbed. This is who you're demonizing, Mr. Jim Cramer. Young Latinos and black people have the lowest rate of C19 jabs in LA County. New data show. Of course, LA County has the most draconian jab mandate in the country. Who are they discriminating against? Is it MAGA people over at New York and LA? Of course not. It is young black and Hispanic people. This is the biggest violation of civil rights. This is the biggest discriminatory action by the government since Jim Crow. And you know what? The majority of the public is cheerleading for it. This is the power of propaganda in the media. U.S. racial jab gaps are bigger than we thought. Here we go. And here is an explanation, of course. When you see orange, that means the black people are not jabbed in that particular state. They're still lagging behind, way behind. And here it is, across the country. Who is the unjabbed, lagging behind? The answer is the black population. All over the place. Pretty much every single state in the country, black people are left behind when we talk about jabs rate. And of course, we have a massive gap between white and black in the majority of states in the country. For example, when we talk about California, among the white population in California, 65% already jabbed. On the other hand, when we talk about blacks, only 54% got the jab. This is an 11% difference. And it gets even worse. In Florida, for example, 20%, 21% gap between whites and blacks. Look at New York, another draconian mandate, and we have 8% gap between white and blacks. So once again, who are you discriminating against? The answer is blacks, Latinos, and young folks, children and teenagers. We'll look at LA County, for example. The majority of the unjabbed happen to be black and Latin. They're lagging behind white, Native Americans, and Asians. Likewise, by age group, we have children, teenagers, lagging behind the adults. So when Jim Cramer and the likes in the media bark and scream that the unjabbed are the problem here, they are the root of all evil. And if they just submit and take the jab, everything will be all right. The economy will go back roaring. We will create jobs all over the place, and the thing will disappear. Of course, all of this is fantasy, not backed up by science whatsoever. And now they're coming after children. We already have a crisis with moms leaving the workforce due to the lack of child care. If we have schools in the country mandating the jab, certain parents will decide to homeschool their kids, and now we're going to have moms staying at home, not joining the workforce, further inflaming the stagflation crisis in this country, where inflation is rising higher, but economic growth is lagging, and we're not creating jobs anymore. They want to jab the kids, even though the science says Perhaps it's a little too early here. Even the FDA, the anti-scientists over at the FDA, they warn parents against jabbing their kids under 12 years old. The science says, these of course according to the anti-scientists over at Columbia University, jabs alone will not end the pandemic, Columbia University model shows. And here is the anti-scientists over at the WHO, the World Health Organization, and they say that the jabs alone will not end the pandemic. We must use a gradual adaptation strategy of living with the thing. And even your boy, your hero, Dr. Fauci, Saint Fauci, God forbid we do blasphemy here, even Saint Fauci. What is that behind him? What does that say? NIH, right? NIH, National Institute of Health. Remember what Steve Forbes said? Steve Forbes said that these mandates are not counting in natural immunity, and this is keeping millions of people behind, not being included in these mandates. They're being excluded, even though the NIH says this: lasting immunity found after recovery from C-19. These are the anti-scientists, of course, over at the NIH. And let's hear from the anti-scientists over at the University of Arizona.
So the immune system protects us against infections, and for some infections we know that we have extremely long protection after we have contracted the disease for the first time. For coronaviruses in general, our knowledge was from prior infections, it was estimated that MERS coronavirus gives us about a year of immunity, and for SARS-1 the thoughts were more like 3 to 6 years. But now actually data are showing that people who have had SARS coronavirus 1 are still immune 17 years out.
Now, our study is really designed to look at antibodies, which are one of the key parts of the immune response. And so we set up a large-scale study to look at people around Pima County and around Arizona to see how well those antibodies are working to protect against infection. So what we were really looking for is, first of all, can we accurately identify people who have been infected at some point in the past by the virus? And so what we really wanted to make sure is that we have a very accurate test. We definitely don't want to tell someone that they're positive, that they have antibodies when they don't. So what we did is we started measuring antibodies to 2 different parts of the virus. And we had to measure antibodies to both of those 2 parts, the 2 independent parts of the virus, for us to say, yes, you're positive and you have antibodies.
So we've correlated, and we found that at a very high level we have exceptionally good protection.
What we found is that everyone who had been confirmed to have been infected by the virus, even people who had no symptoms whatsoever, made a really nice antibody response. And they all made antibodies that kept the virus from infecting cells. What we also found is that everyone maintains those antibodies for as long as we've been able to look.
We cannot really put a solid number on how long this immunity is going to last. What we know is what we have measured, which is like that it is at least 6 to 7 months.
Folks, this is no longer about science or protecting the public. This is about ego and control. And this ego and control battle will destroy the economy and push it further into stagflation. Of course, the media doesn't want you to think critically. And I'm not joking, by the way. The media says you must not do your own research when it comes to science. The media says don't go down the rabbit hole. Critical thinking, as we've thought or taught to do it, isn't helping the fight against misinformation. Folks, stop critical thinking. That's the enemy, critical thinking. CNN says, how do your own research hurt America's C response? Oh, really? Don't do your own research, folks. Just trust us over at CNN. The Washington Post says, how do you persuade skeptics to get jabbed? Trust matters more than information. Forget about information. Just trust whatever we tell you. You know, last year when President Brandon said, we choose truth over facts, people thought he's just demented and he lost it, yada, yada, yada.
We choose truth over facts.
We now know that he actually meant what he said. We choose truth, whatever manufactured truth it is, over actual facts. And of course, This kind of Orwellian strategy will not work without brainwashing the majority of the population to become cheerleaders and goons for Big Pharma. The media says why we can't think logically about C-19 jabs. Stop thinking logically, folks. This is the core of the problem. Just become brain-dead zombies. We'll be just fine. Of course, all of this is a distraction. The battle between the jabbed and the unjabbed, black and white, Republicans, Democrats, whatever teams you want. All of this is a distraction from the biggest heist in human history, the biggest transfer of wealth from the poor, middle class to the rich. Last year, they said we want to impose lockdowns to flatten the curve. We now know the curve was never flattened, and they only flattened the poor, the middle class, and small businesses in this country. We have an entire generation of poor kids who are going to be left behind, and they will be unemployable when they graduate. If they graduate, of course. You see, the rich, the privileged, they were able to keep their jobs working remotely, and they spent thousands and thousands of dollars buying gadgets from Apple, laptops and iPads for their kids to be homeschooled. Meanwhile, poorer kids did not have Wi-Fi, did not have laptops, and they had to go to Taco Bell to do their homework, to get access to Wi-Fi. We have destroyed an entire generation of kids. This is the achievement from all of these draconian measures. We have destroyed small businesses in the country. The number of small businesses destroyed by lockdowns will astound you. On top of that, we have destroyed over 41% of black small businesses in the country. And what was the achievement, by the way, from all of this? Making Amazon and Wall Street richer than ever before. Matter of fact, the net income for Amazon doubled year over year last year. This is the crime of the century. And they want to distract you from all of that by keeping you busy in a battle between the jabbed and the unjabbed and yada, yada, yada. More disasters and revelations from the jobs report we got on Friday, and this time around it concerns women. Women are leaving the U.S. workforce is driving the participation rate down. We have a mass exodus from women from the workforce, and they're staying at home. Why? They gotta homeschool their kids. Child care cost is through the roof. Nobody can afford that. Child care facilities are struggling with labor shortage. They're having to pay their workers higher wages to attract them to do the job, and therefore parents will have to pay more for child care. And therefore we have women, mothers, saying, you know what? We're just going to stay home, take care of the kids, and this will drive the economy further into stagflation. Of course, they say we're going back to the 70s here. We're going back to the 70s without the dope and the good music. We're going to go back to the 70s only to get the bad stuff. Stagflation and keeping women at home, busy at the kitchen. We're erasing decades of progress in gender equality in the workforce. It's being erased right before our eyes. And we also have an organizational management crisis in America, with employers and companies not appreciating the workers, cracking the whip, underpaying and overworking the workforce. They're not allowing any autonomy, any critical thinking. They're not giving the workers any credit and not allowing personal growth in the organization. And therefore, workers are fed up and they're quitting in droves. Micromanaged and disrespected, the top reasons for workers to quit their jobs in the Great Resignation era. Matter of fact, 40% of employees are quote-unquote somewhat likely to quit their jobs within 3 to 6 months. This crisis will get even worse. And if Jerome Powell, the delusional man that he is, believes that printing more money for another month or two will convince these workers and the unemployed to join the workforce, then he is indeed delusional. The only achievement he will get is pushing inflation higher and higher and higher to hyperinflation levels. We have an irrational, delusional man leading the Fed right now. And this is, of course, research from McKinsey. Compensation is a factor, but workers are not complaining about wages only. But contrary to what most companies might believe, it is not the main reason people are contemplating quitting. McKinsey findings show a majority of employees highlight not feeling valued by their manager, 54%, or organization, 52%, or not feeling like they belong, 51%, as the primary reasons for leaving. Many companies are boosting pay or offering bonuses without making any effort to strengthen ties with people, with their colleagues and employers. Folks, I have consulted over a dozen companies, mostly software startups, and you will be amazed by the egregious errors and mistakes they do in organizational management. For example, I walk in a company who's struggling. They hired me to find out where the problem is and how to polish their strategy and gain more clients and growth. The moment I walk in the office, I know what the problem is. You have a massive board, a whiteboard, with employees' names, and it's a scoreboard who's delivering more clients. You're pinning your own employees against each other. You geniuses. You're supposed to pin them against the competition, another company. You're supposed to create teamwork and a feel of belonging to the company. You walk in these offices and you have workers in cubicles. Meanwhile, the executives, they say, oh, we have an open platform. An open work model. And by open work environment, they mean cubicles, and then they have glass offices, massive offices for executives overlooking the cubicles. And oh, by the way, they have an arcade machine, a ping pong machine. You see, we care about our workers. But what are the workers seeing, by the way? They're seeing a bunch of greedy executives sitting in glass houses, in massive glass houses. And oh, by the way, the CEO is playing on his Peloton and all the workers can see what he's doing. You think this is a good working environment when you're pedaling on your Peloton in your glass house overlooking your employees in cubicles? And oh, by the way, you're driving to work in your Ferrari that you bought from the venture capitalist money that you raised for your company. Meanwhile, your employees can see your Ferrari in the parking lot. And guess what? They're not driving Ferraris. Absolute lunacy. At a touch, they treat their workers like animals and then they expect to succeed. You're not going to succeed. You're going to fail miserably. And then they say, oh, but we give our workers bonuses. When they deliver, we give them gift cards. What is the problem here? Your workers don't need gift cards and bonuses. Your workers need you to stop the hostile work environment and stop being an asshole. Appreciate them. Listen to them. Involve them in the decision-making process. This is what employees want. They want credit for the work they do. They want appreciation in the office. But folks, we have an organizational management crisis in America, and it is contributing to workers leaving the workforce in droves. On top of that, the Gen Zers and the younger millennials, they have options these days. They don't have to work at McDonald's, and therefore we're seeing restaurants struggling to create jobs because the kids, they're outsmarting the system and they're finding alternatives these days. For example, here's a headline. Leaked data from Twitch showed that the last month alone, a video game streamer earned approximately $705,000 from the platform in 1 month alone. Why would a kid making $700,000 in a month go back to corporate slavery for crappy wages and face mistreatment from their employers? Nobody needs that crap. We have kids making money from OnlyFans and selling pictures of their feet online. Good luck with maximum employment, Mr. Powell.
My feet are worth millions. Any foot picture you can imagine, I've taken. My name is Sativa, and I got rich selling pictures of my feet.
And here we have another one. This 24-year-old dropped out of Colombia to build a $140 million underwear brand. Of course, she's selling other underwears, not hers. And of course, we have YouTubers. The creator economy supports an equivalent of 394,000 full-time U.S. jobs. So apparently, us YouTubers are rolling in cash. Here's another extremely important finding from the report we got on Friday. Wages are rising higher. Wage inflation is rising higher. And we know that wage inflation is permanent. You're not going to pay people extra and then come out later and say, you know what, we're cutting your wages because inflation was transitory. Not going to happen. Wages are rising higher, and Jerome Powell is shitting his pants right now. Of course, the corrupt media is trying to put a lipstick on a pig because they're not interested in journalism anymore. They're propagandists. That's what they are. For example, the New York Times says the new jobs numbers are pretty good, actually. Really? But even the propagandists cannot hide the truth. But even the good news came with caveats. The unemployment rate declined, in part because fewer people were in the labor force, a sign that the hiring challenges that have bedeviled employers all year won't be quickly resolved. Ta-da! Rising wages could add to concerns about inflation, and the conflicting signals could complicate decisions for the Biden administration and the Federal Reserve, which is waiting when to begin pulling back support for the economy. Correction, not support for the economy, support for Wall Street. And of course, wages are rising higher, specifically in the leisure and hospitality, because the demand is surging and they cannot find workers. They have to pay them more and more and more. And of course, when the so-called accommodation policy is removed, the stocks of Marriott and the cruises will collapse, and all of these jobs will be lost, poof, in about a week or so. And of course, we're having to resort to dire measures now to resolve the labor shortage. Americans with criminal records could be a solution to the labor shortage. Of course, for JP Morgan, this is business as usual. They hire only criminals because it is a criminal organization and they need expertise to commit their crimes. And here's another finding from the jobs report that we got on Friday. Remember when I told you a few months ago that all of you who are blaming the labor shortage on the enhanced unemployment benefits, meaning $300 a week, you're wrong. And once the $300 a week expire in September, you will see that the labor shortage will even get worse. And employers will struggle to find workers even after the $300 a week expire. Because the $300 a week was not the main motive for workers to stay at home. And we now know that I'm right. Unemployment benefits ended, but hiring did not surge in September. Ta-da! Once again, do I get a cookie, a candy, a piece of gum, something for being right? Of course not. But the $1 million question in this program is, where does this jobs report leaves us when it comes to the monetary policy? Because this is the most important element that we look for in covering the stock market and the economy. Let's hear from expert Jim Cramer first.
But does this say anything about the Fed, and does it give them some more breathing room in terms of when they start? It does.
Yeah, I mean, Jay Powell sees this number, and I'm sure he wants to say to all the guys that come on air all the time and say that he's well behind and we're going to have hyperinflation. He's probably saying, look at this. People are dropping out. People are worried about COVID. I got to protect the economy. There's not enough job creation. It's been what he's been saying. I know that the people, as you said, there'll be people say stagflation. Give Jay Powell a break. We were looking for 500. He wasn't looking for 500. I think if we have one of those ridiculous press conferences that he's in right now, all of those people who make fun of him and ask him about questions about why do these people buy stocks and stuff, they'd be silenced because they'd have nothing to hector him with. It's good for Jay.
And of course, Cramer says, this is good for Powell. Powell was right. We want stocks to go higher for me and my friends to get richer. The problem is that Jimmy Cramer is wrong again. Why? Because this report is the worst case scenario for Powell. Think about it. He was waiting for maximum employment. He is waiting for substantial further progress in employment before he starts tapering and removing the accommodation from Wall Street. What did he get this time around? He got an abysmal report, which the Wall Streeters think it will be good for them because Powell will continue to print and therefore stocks will go higher. The problem is that this jobs report proves that the policy from the Fed is misguided and it's not working. The Fed has been pumping a minimum of $120 billion a month, and the only achievement they got is higher stock market, a massive bubble, irrational exuberance on steroids, a real estate market in hyper-bubble territory, pricing the majority of Americans out of the market. He also achieved a massive inflation problem, but he failed to achieve any progress in employment. Why? Because there is zero correlation between the Fed's policy and the creation of jobs. The creation of jobs depends on the progress when it comes to the virus. The virus is in control of the creation of jobs in the economy, not Jerome Powell and his printing machine. Furthermore, while the headline number is down, far below expectations, perhaps prompting the Fed to continue the accommodative policy, you are mistaken in this assumption because the unemployment rate actually went down, hence substantial further progress. The problem is, it is not the kind of substantial further progress that Powell wants, because the unemployment rate went down because people are quitting and they're leaving the jobs force. Furthermore, it is an abysmal worst-case scenario for Powell because wage inflation continues to rise higher and higher and higher. And on top of that, actual inflation across the economy also continues to surge higher and higher and higher. So what does that mean? The worst case scenario. Powell will be forced to taper and reduce the accommodative policy even though the economy is crumbling right before our eyes. We warned and we warned and we warned about this exact scenario months ago, and we said the Fed should start tapering back then to avoid this scenario and to have the room to wiggle if we get this stagflation scenario. The Fed did not listen, and we are now about to face the most dire scenario for the market and the economy. Perhaps Powell should take a lesson from Canada, because Canada recovered all of the jobs they lost during the pandemic. Did they do it by accommodating for Wall Street and the stock market? Did they do it by printing money out of thin air in an irrational manner? Of course not. Matter of fact, Canada raised interest rates higher, yet they managed to recover all of the jobs they lost during the pandemic. But perhaps Jerome Powell and the Fed already achieved their mandate, their secret mandate, their real mandate. The top 1% of U.S. earners now hold more wealth than all of the middle class combined. This is the achievement from the greatest experiment in financial history, led by Jerome Powell and the Fed. These are the results, Mr. Powell. This is what you succeeded in achieving. Not full employment, not price stability, but creating the biggest wealth gap in the country's history. And the share of the middle class is diminishing, be it from real estate, corporate equities, mutual funds, private businesses. The middle class is being destroyed right before our eyes. This is what you have achieved so far, Mr. Powell. You and your buddies at the Fed doing insider trading, enriching yourselves while destroying the middle class. And now it is too late to act. You've already achieved the worst case scenario, and it is just a matter of time, perhaps weeks, before the imminent collapse of the stock market and the economy happens. Congratulations. And with that positive note out of the way, folks, let's look at some charts here and wrap it up. Let's start with a 30-minute chart of the SPY and see what's going on here. The S&P 500, of course. We have a gap higher that continues to melt down and down and down. And now the support of 438 has been violated. Likewise, the bottom of the gap up higher candle has been also violated. Is this bullish or bearish? My answer is it is bearish, because if this is indeed the bottom and the chart is gapping higher due to legitimate buying, then we should have seen a follow-up. We should have seen more buying pushing the chart higher and higher and higher. On the other hand, if this is a mere oversold rally, a technical bounce, then it should be followed up by more selling, the primary theme of sell the rip. And this is exactly what we're seeing for now. It is not definitive yet because we have not closed below 438 decisively. We closed below it by a few cents, and therefore the bulls are still hanging on the assumption that perhaps this is a massive bull flag consolidating for now. We will see the follow-up in the next week, meaning this upcoming week, as the market digests and ruminate over the number that we got on Friday. We have the battle of the gaps. We have a gap higher around 443. We have a gap down around 435. Which gap will be closed first? My bet is the gap below around 435. It could happen during the overnight market. And matter of fact, the most bullish scenario here is you see a closing of the gap overnight, and then the market opens up higher as we see buying the dip happening overnight. What about the daily chart for the continuous contract in the SPY? What's going on here? Still facing the same resistance, struggling to break up higher, even though closing the week above 4,384.5. Likewise, the momentum indicators are becoming bullish now. So this is a battlefield. The bulls have certain technicals behind them. The oversold technicals, the momentum indicators that are becoming bullish again. The bulls have all of these factors to bank on a move higher. The bears have a lot of fundamental reasons to bank on a move to the downside. That this is resistance, and the SPY, the S&P 500, will not be able to break above this sloping downward line. As a matter of fact, it will start to break the support of 4,384.5. From a daily chart perspective, I would say it's a toss-up here, a battle between the technicals, the bull side, and the fundamentals, the bear side. Here's the problem though. This is a weekly chart for the SPX, the cash index for the S&P 500. Since the March bottom of last year, look at the MACD indicator. We have not had a prominent crossing to the downside, creating negative impressions on the histogram since the bottom of last year. We are now seeing a successful crossing, not a fake out, and it is continuing to happen, meaning that the momentum has been broken for real this time for the first time since the March bottom. Likewise, from a monthly chart perspective, it looks like the positive momentum is topping. You see the green columns are getting shorter and shorter and shorter. We have a reversal candle on the monthly, the red candle, and therefore perhaps we have a top already. So any bounce here is to be sold. Sell the rip. What about the Qs? 30 minutes chart. What's going on here? We had the gap higher on Thursday. No follow-up. The chart continues to melt down all the way to the support of 360.5. The good news is the chart closed the week above 360.5. The problem is it was supposed to move higher and close the gap above at around 370. Now the likelihood is the chart will visit the gap below at around 360 first. And if it fails to rebound from that point on, specifically overnight, then we get a massive problem here. The support remains for now 360.5, the resistance at 363. And what about the daily chart for the continuous contract for the Nasdaq? We had the head and shoulder pattern. The chart broke down, violating the support of 15,000. We had another bear flag that went down but reversed right away. The bulls are hoping for an ABC pattern. What does that mean? The chart pops higher, a rebound higher to 15,000, the resistance now. It struggles to break up higher. It moves down for a little while, and then it gathers the energy and gives it another shot, and indeed it breaks above 15,000. So the bulls still have an argument here, and this argument remains alive. Likewise, the bulls have the momentum indicators, which are bottoming and they are starting to curl back higher, but we have yet to have a positive crossing in the MACD indicator, and therefore the bears are saying what we had last week is a dead cat bounce. The chart is facing the resistance of 15,000 once again. The volume continues to climb higher on down days. The momentum remains weak, and therefore the chart will flush down to the lows once again. Perhaps the most important chart to watch is the daily chart for the NDX, the big Nasdaq. You see the trend line. If the trend line is violated, we have a definitive closing below the line from a daily chart perspective, then you're gonna run for the hills. The hope is still alive for the bulls, so long as the trend remains intact. But if the trend is broken, say goodbye and run for the hills. Moving on to small caps, the Russell 2000, the IWM 30 minutes chart. What's going on here? Popping higher, but look at this chart, the so-called leading indicator. It is violating the resistance and closing at the lows of the day. It violated the support, the 223, which is now becoming resistance once again. The likelihood is the chart will go down, closing the gap at around 219. If it doesn't bounce from that point on, then the support of 218 becomes the next destination for the chart to retest that support. If that support fails, then we get a problem. What about the Dixie? What's going on here? Still within consolidation range. We don't have a breakout one way or the other. In my rules for a market bottom, I look for a topping formation in the dollar index, the 10-year yield, and climbing the wall of worry. The question is, do we have a top in the US dollar? The answer is no. If anything, the dollar is about to pop higher because it is consolidating within this bull flag formation, meaning we have higher highs for the dollar. And if my reading is correct for the market, when it comes to the fundamentals, that this is the worst case scenario for Powell and the Fed, which will force them to taper anyways, regardless of the abysmal jobs report that we got on Friday, then the dollar will continue to pop higher. And this, of course, will not be good for gold, even though I'm keeping my bull flag here, keeping the hope alive, but I am betting that gold will not make it here, and it will flush down all the way to 1,685 at a minimum. Here's a chart for the 10-year yield, the daily chart. We have the ABC pattern playing, and the destination will be 1.7 at a minimum. If we get to 1.7% on the 10-year yield, you bet you will see destruction in the Nasdaq, the Qs, the big cap technology names. And if these names get hit, the entire market will get hit. The only confirmation for a rally in the 10-year yield is in financials. And that's about it, but I doubt that financials will stand alone while the rest of the market suffers. Moving on to the TLT weekly chart, what's going on here? We have a confirmation of the reversal in the TLT. Bond prices are going down, the MACD is crossing, the volume is rising higher on down weeks, we have a negative divergence on the RSI. All signs are pointing for more downside in the TLT. That means more upside in the 10-year yields. the TBT. What about the VIX? What's going on here from a 4 hours perspective? We have a flush down. The MACD indicator is saying that the pop is over. It was holding in a zigzag formation, consolidation back and forth, but we now have a definitive answer. The VIX closed below 20. This is a win for market bulls. The MACD indicator has a confirmation to the downside. This is yet another win for the bulls. The problem is we also have a win for the bears because the gap is closing. And who's to say that the VIX is not going to reverse once again and have another pop higher? You continue to watch the MACD indicator on the 4 hours chart. The moment you see green columns on the histogram of the MACD, understand that we have more downside in the SPY, and it is confirmed by a move higher in the VIX. But what about Apple? What's going on here from a daily chart perspective? We have somewhat of a bullish formation here, a bull flag formation, but the confirmation for the bull flag will be closing above 145. This has yet to happen, and therefore the bears continue to have the advantage. If yields continue to pop higher, this name, Apple, the biggest name in the market, will continue to sell off. What is the target for the correction in Apple? All the way to the lower end of the trading channel, which will be top to bottom 15% correction. The guy you're listening to right now is not buying the dip until and unless we get to that number. If we don't and the chart climbs higher, then I will look for other confirmation signs before I hop on the ride. And these confirmation signs will be closing above 145 and then reclaiming 150 for support. Then we're out of the woods. The correction is over. Apple will go to all-time highs once again. We have yet to see any of these signs. Moving on to Tesla, the souffle 30-minute chart. What's going on here? We now know that we have seen or witnessed a pump and dump scheme right before the meeting with Reverend Elon Musk and his investors. And of course, the biggest revelation was a bust, just moving the headquarters from California to Austin, Texas. No new products, no more clarity when it comes to the chip shortage, nothing at all. And therefore, the chart is trading down. We have a flush down, and we went from bull flag formation to pop higher to a bear flag formation. We don't have a confirmation right now in the bear flag. The confirmation will be if the chart closes below 781. Absent of that, the bear flag is not confirmed yet. Again, this stock moves primarily based on the options market activity. So we continue to watch the options grid, who's buying calls, who's buying puts. For now, what I witnessed so far, the bears are avoiding this name. They're not bidding against this name heavily, leaving the least path of resistance higher. But we do have certain big bears who are making large bets, buying put options against Tesla. We see that every single week. Are they going to be successful at a certain point? Yes, they will. But for now, this stock remains a Teflon stock. We have seen a massive correction in the market. Certain names are down 4, 5, 6%. This name is untouched for now. And I do believe, firmly believe, that it will be the last block to fall in this correction and the popping of the bubble. I do have certain put options, and I will double down if Tesla crosses below 781 and closes the day below 781. And what about tulips? What's going on here? The candlestick formation remains bullish. The momentum indicators remain strong. Nothing bearish here whatsoever from a technical perspective. But from a fundamentals perspective, we got a problem here. On one hand, you have your boy Gary Gensler, who's about to unleash the biggest crackdown in modern history from the dormant in coma organization that is the SEC. Are they going to wake up? Of course, he's barking for now, but who's to say that this man is not going to wake up from his coma? At some point, maybe he has to wake up from his coma because the rich already scored. Corporate executives, Wall Streeters, Fed presidents already dumped at the top, by the way. And now, Mr. Gensler, you have our blessings and permission to crack down. And by the way, your boy Brandon also coming for you. He's also planning a wide-scale crypto crackdown. So watch out here and be careful of becoming too greedy. Lastly, moving on to AMC. What's going on here? It appeared like we have a bull flag formation, but I'm removing the bull flag here because the action on Friday was not so good. Not encouraging at all. Of course, I put my gorilla suit on for about a day for a call option trade that lasted one day. I made about 30% gain, which is in options world not so impressive, but good enough. And I took the gorilla suit off and I will probably bet against the stock in this upcoming week. So watch out here, apes, because when we zoom in to a 30-minute chart, for example, what do we see here? We had a descending, sloping resistance line. This was broken to the upside, and this is a bullish sign. But what happened on Friday? We had the double top formation, and the chart closed at the lows of the day, signaling the chart doesn't have what it takes. It doesn't have the energy and the fuel to pop higher. This is yet another alarming signal. The retail trader crowd is pretty much disappeared. They're not buying the dip anymore. They're not gambling on options. And it is just a matter of time before these apes start to dump and panic. And if they start to panic, it will be a massive flush down. Perhaps in a week or two, you're going to lose the entire gains year to date, even though we have some promising signals here. The box office is coming back, and we're about to see the numbers from the new Bond movie. Perhaps AMC can rise higher for a day or two based on the Bond news. But watch out here, the problem will be if we get a number, an impressive box office number from the Bond movie, yet AMC trades down anyways. That will be an ominous scenario. Watch out for that scenario to happen. Lastly, moving on to the conclusion of this video, what do we have on the economic calendar this upcoming week? On Monday, nothing. We have Columbus Day. The stock market is open, but I believe that the bond market is closed. And then on Tuesday, October 12th, we have the small business index and jobs openings. Wednesday, October 13th, we're going to have the most important day, the CPI, aka the CPI, on top of the FOMC minutes. And of course, if inflation continues to rise higher while employment is not recovering, we will have a confirmation that Powell will be forced to taper. Thursday, October 14th, we have, per usual, the weekly jobless claims and the PPI, the Producer Price Index, another important inflation index. On Friday, October 15th, we have retail sales, the Import Price Index, the Empire State Index, the Consumer Sentiment Index, and business inventories. An important week, a decisive week, because for now, market bulls, the Wall Streeters and the likes are crossing their fingers, hoping that this abysmal jobs report will push the can down the road when it comes to tapering. The problem is if the CPI and the PPI come out too hot, and in all likelihood, by the way, they will come out too hot regardless of the cooking, because rents are rising higher, energy prices surged significantly higher month over month from August to September. The bears are waiting for a confirmation that this is the end of the bull rally and the beginning of the collapse. If the CPI and the PPI come out too hot, then Powell will face the worst-case scenario. He will be forced to hold his nose and taper regardless of the abysmal jobs number that he got last Friday. And with that, folks, thank you for watching. Thank you for listening. This is all I got for you for now, but I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.